All right, so the market has shown some signs of cooling, and agents and consumers are wondering what's going on. Well, we're going to dig into that in just a minute. I've got Chris Jacob here with the Housing Report. But before we get started, if you're watching this on YouTube, feel free to like and subscribe. If you want to subscribe to our podcast, the link for the podcast is in the description. And if you want to sign up for my newsletters, which go about once a week, that have to do with agent training, high-level training, podcast guests, and just a whole lot of information to help you with your business, you can, let's see, is that clear? Let me go back to it's clear. Oh, this is my first time doing this. Yep, there we go. All right, so hopefully that worked, maybe not. Okay, so Chris, we lost your camera there.
Hold on, I'm trying to get it going again. Sorry.
There you go.
My apologies.
So, Chris, once again, thanks for being with us. And so, I saw some numbers that the total sales decreased 16% in April. Looks like appreciation is slowing down. People are wanting to know what's going on. What do you have to say?
Well, we are definitely in a transition period for the Austin marketplace. It's kind of interesting to see what's kind of going on. What stuck out to me for the month of April is we've got a large, we've hit a record level of listings for the month of April. They were up 3.5%. Pendings overall were down about 3.5%. The number you saw for solds was 16, and I updated this data as of 9 a.m. this morning. We're down about 13% for April over April.
I say down on that's a sales
volume.
Sales volume is down, and
sales volume.
We've got record number of listings compared to what?
Compared to any of the Aprils past.
Wow.
So the April of 2022 will have the largest single listing volume for the month of April, 4,114 units.
Now, are these resales, new builds, all the above?
Predominantly new builds. So it's kind of an interesting situation, right? We've been kind of talking about is actually resale listings were down almost 12%.
Oh man.
So we're seeing resales come to the market slower. Resale pendings were down 15%, and resale solds were down about 18%. These are still really good numbers because the values are up. The months of inventory is still under 1 month.
Yeah.
We're just not seeing the supply come to the marketplace. But what has happened at the same time is we're seeing new build backfill the void left by resales. So new build listings were up 92%. In some markets in Williamson County, they were up 150% year over year. So we're actually seeing new build closings for the 5-county area being up almost 11% for the month of April. So it's kind of weird as we're seeing the resale market constrict, we're seeing the new build market expand in the MLS. Right.
And we're starting to see, that the builders are starting to give incentives again.
We are. I saw the email. I forget which builder it was. They were offering 4% commissions, and last year this time they were offering 0.
Right.
So it's kind of interesting to see the return to normal. Yeah. I'm going to call it, where homes they're on the market for more than 2 days, 3 days, or 1 weekend.
Right. And I spoke with Max Lehman yesterday. There will be a link to that YouTube video somewhere up above my head when this goes live. And the interest rates are up. He's seeing less volume as well for new purchases. What do you want to go to your charts and you want me to pull your charts up?
Yeah. I just want you to we'll start with chart number 1 so everybody can kind of see the numbers. They can pause the video and actually digest these so they just aren't us reading it.
Sure. Okay, can you see this?
Yes, sir.
Okay.
All right, chart 1. So this is just for everybody, a quick crash course in it. The first bar across is all types of sales. Second bar across focuses in on resales. The third bar is the new units. And then we have the dollar figures for the respective columns above in the same order. So as you can see, unit volume is down, transactional volume's up, the reason that's happening is we're still in an ultra low supply. We're sub one month of inventory, and when when they're that low in inventory, we're still going to have escalating values. The speed is going to slow down, but we're not going to see appreciation come to an abrupt halt anytime soon.
Yeah.
So let's go to number two. Number two is these are my real-time data charts. So this is as of this morning, 9 a.m. And I put a line in this chart here to show May 10th of last year. So when we look at this chart, the things to remember is the orange line across the top, that is the number of unit volume that is pending. So we're pushing almost 7,000 pending sales that are booked and not reconciled in our MLS.
Yeah.
Our yellow line is our months of supply. And if you look at where we were last year, we were about 5 months. Today, we're a little over, or 0.5 months. Today, we're about 0.8 months. So we're at about, not double, but about 80% higher months of supply. And then we've got our gray line, which is our closed sales, and then our blue line, which is our active count. So as you can see, compared to last year, we got far more inventory in the marketplace. We've got far more pending transactions, and sales are a little slow to kind of complete, which makes you wonder, hey, what's going on? Why are we going to see slow reporting of sold? So if we go to the next chart, this explains it all. And this was really, really interesting. So this is the breakdown of what is pending. So blue line is all the homes that are pending. The yellow line is the new build as a percent of pending. And if we kind of look at that, last year, this time, new build as a percent was about 40% of all pending transactions. Today, it's hovering about 60%.
Wow.
So what we have is builders are taking longer to deliver homes, and they're accumulating as pending transactions. So if we go look at the orange line, which is the resale pending. So you can see we are way down on resale pendings compared to the same period last year.
Wait a second. So the orange line, it looks like, so I'm looking at 5. That looks like it's
about
up.
2,700 pendings right now.
Oh, I see. Okay.
And if you look at last year, we were about 32.
Yeah. Okay.
So they're trending upwards, but they're down compared to year over year. We've actually seen.
You made a point, I think, a couple days ago when we were texting something about, like Mother's Day was last weekend, right?
Yeah.
We had Easter a few weeks ago.
Yep.
I think that we're going to see, and especially with, like the property tax evaluations, I think we're going to see more resales, especially when it comes to investors. Because if you look at what I've told my agents, like if you have investor sellers or investor buyers, get in touch with them. Because what has happened, especially these out-of-state investors, they bought something 6 years ago. They're not keeping up with the rent. They're not keeping up with the upkeep of the property, yet their property has increased so much. They're just all right, let's cash out of Austin right now.
Exactly. So it's kind of weird because predominantly my business is investor based. Mm-hmm. And I'll be honest, since COVID happened, we have not bought one single family home.
Yeah.
In the whole COVID period. Mm-hmm. We bought some duplexes and some other stuff, but multifamily, commercial, but we hadn't bought any single family homes. In this month alone, we've executed 3 contracts for purchases for single family homes.
Right. Now, I wonder, this is probably really hard to tell, but
yeah,
I wonder if there was a percentage of owner occupied listings versus non-owner occupied listings, that would be interesting data. Not for every single time, but like looking at, this month versus in 4 months. I bet that data would show a large increase in investor owned properties.
Ryan, I think I can figure that out.
Okay.
The data's in the MLS. And I'm sorry, I've lost the show completely. There we go. The data's in the MLS. I'm going to root in there and see if we can figure that out, because I think you're right. When we ancillarily looked at this at the beginning of COVID, it almost was all vacant listings. Because nobody wanted people in their homes not knowing what the pandemic was going to do.
Right.
So there was a big shift to everything was vacant. And that's where those cash buyer programs became really popular, because you go buy a house and not have anybody in your home at the same time. Mm-hmm. So I think that is an interesting thing to consider.
Yeah.
So let's go look at the real time on resales. Now, this is exclusively looking at resales.
Mm-hmm.
So what we've got is you can see just how resales are kind of playing out. We've got more resales in the market. We've got marginally more investors. Pending sales are solid and sold sales are solid. So I think the resale market's still healthy. It's just not as crazy as it was last year. So those are what you're touching right now. That is the red is the pending count.
Okay,
Gray is the sold count. Blue is the active count, and yellow is the months.
that's the months of inventory. Okay,
That's the months of inventory.
this is the active count. So it's starting to go back up as it does every year, right? We're just not where we were last year. Well, actually,
We're way higher on
we're
available.
higher on
Yes,
the
sir.
retail. Okay. Okay. Well, what was this one then that I messed up on?
I'm sorry, this is the breakdown of pendings. This is between new and resale. So we can kind of see
Okay. Okay. Gotcha. So
where the
as
two are.
expected, we're way higher on resales than we were.
Yes.
There's a segment of the market, they're far below new builds.
Correct.
Yeah.
Correct.
Okay. Okay.
So it's this really weird situation. I don't know. I was reading through emails yesterday. I've got to buy one more single family home this week. And one of the things I kind of was looking at was I want to see how many people can get offers this weekend. I know I wanted to do this talk tomorrow after the weekend kind of reconciled out, but I really feel that we're approaching a pivot point. So we're moving from a strong seller's market to just a seller's market.
Well, we have a huddle call every Tuesday at 10:30. And that's the first thing we do. You know, there's probably 40, 50 agents on there. And the first thing we do is the pulse of the market. I can let you know about it. You can join if you want, but if you ever want to, that's you know, but here's what I'm noticing. I've gotten a few agents that have sent me, you know, emails. Oh, my home's, you know, this listing's been on the market for 7 days. Oh my God, you know. And what I tell them is it is time to start setting expectations for sellers, right? Because see, you and I and the rest of them, well, not the rest, but some of the real estate community is going to be ahead of the consumer with this knowledge. Okay. And so, you know, even if they're not buying into it completely, then you know, you really need to feed them this information. Like what I encourage people to do, you know, if they have a listing coming up, is, you know, take some of these videos that you and I have done, send that to them. That way they're not just hearing it from, you know, the real estate agent that's trying to price the thing low. I mean, we had an agent that asked me about a property yesterday. It was 800,000. And I looked at the comps and the comps looked good. They looked really good, but those are last week's comps, you know.
Yep.
So, you know, the interest rate going up, you know, as much as it has in the last 60 days has a significant effect on the market.
Well, I'm going to tell you right now, I believe 100% interest rates are what have caused those shifts we're seeing in year over year data on resales. It's 100% interest rate driven. It is, even as us with investors. Yeah, 5.5 sucks compared to 3.5 last summer. But if they make money, they make money. We're excited to be able to buy homes again.
Dude, and like remember what it was like before? Like people have very short memories. I mean, these low interest rates have been for, you know, 4 or 5 years at the most.
Well, yeah, well, the ultra historic lows, the 3% below. I mean, that was really a 15-month run.
Right.
And we got addicted. Me and you, we all have got addicted to the sub 5. But we all have amnesia to remember when we bought our first home in Austin 15, 20 years ago. Man, we were excited at 6 3/4.
I think I saw Max yesterday. I think my first mortgage was like 7.
Yeah, but mine with my wife was 6 3/4 on our first. It was 9.5 on the second. And by gosh, we were so happy to be homeowners. And today, if you threw a 9 at me, I'd be like, ooh, I don't want to do it.
Yeah. And I think the takeaway behind this is like, this is what we've been waiting for, right? Because, you know, the increase in values, the increase in appreciation, it's just not sustainable long term. And so, and it's going to be easier for, I mean, we have got like 400 inbound leads to our company, you know, each month. And my agents, they've done a great job last year, but man, they're out there in battle with multiple offers, you know?
And I wrote some 2 weekends ago. We went out, we wrote 4 offers. We got 1 accepted, and then we were strong backups on the 2. And the strong backups on that we were, the feedback from the agents were, man, those are really good offers. You wrote a really, really fair, but there's still some PTSD from buyers who just wrote stupid over us. So when I figured out where we were, they were 10 or 15% above where my offers were.
Yeah.
And my offers were 5% over ask, but there's still some buyers out there stroking big numbers. So that premium, what's interesting in that premium, we didn't talk about it right now, is the premium over list price has been on a downward trend the last 30 days. So that 5% interest rate is driving those premiums down. People aren't tolerating them as much as they have in the past.
Yeah.
They're still in the marketplace, but they're not, seeing something go for 75,000 over on a $330,000 house is just kind of crazy. We wrote that one at 15 over, and it was like, yeah, we can't compete at 75. We just aren't players.
Right.
At that point.
Right. The game has changed. And so, if you're a real estate agent out there, this is your job. What your job to do to make the most out of this is educate your consumers, educate your would-be consumers, right? Put this information out there so that everyone knows that the market has changed. Okay. I've been saying this is why we've been doing video for, years now, right? Is like, another thing is these nurtures, okay? This is a big opportunity agents are missing out on, right? They all want to go out on these hot leads that are coming in. Well, what about the people that signed up last year that were, we go on our stages, we go from, buyer, hot prospect, buyer to nurture, right? This is the time to take these videos, make one of your own, let them know, guess what, guys? This is going to be the best buying season, meaning that you're going to have more opportunities to get the property you want. Yes, it's more expensive than last year, but we can't help that. Okay. And get in the home, because a lot of the people, feel sorry for them, but are pushed out of this market, right?
Yeah.
Both
absolutely.
on price and because of interest rate.
Absolutely. Now, you touched on something that I wanted to kind of circle back on. You were talking about property taxes.
Yeah.
This is going to be a wild card for everybody until October. I encourage everybody to protest your taxes, go in, see what you could do, homeowners, investors, whatever, just protest them to drive the bureaucratic process to work.
Sure.
But I think what's going to really surprise us in the end, Ryan, is there are statutes in the state that control how much money the ISDs can raise and how much the government agencies can raise. And those budgets have mechanical factors that keep them from realizing the full tax value gains. So the city of Austin, just because values went up 56%, the city of Austin's budget is not going to go up 56%. They're capped by statute at 3.5% for the existing tax base year over year. So I think what we're going to see is homeowners with homesteads are going to see potentially, my wife and I made a bet. I bet her $100 that we pay less this year in property taxes than we did last year. I hope I'm right. I really do think so. Because think about it, we're stuck at a 10% cap for homesteads.
Yeah.
The budget's stuck at a 3.5% increase for the budget. Investment, being raw land, commercial, and rental properties, they're not protected by that. So I believe we'll see a burden shift from homeowners to the unprotected on the caps. And then layer in that 3.5%. It's mathematically possible that we as homesteaded homeowners on our primary residence could see a rate drop, as in dollars paid.
Wow.
Because the mill rates, they just can't go and capture that 56%. So renters are going to have, rentals, commercial, and raw land, those they're going up.
Yeah.
But the reason I say I think homesteaded properties will pay less is in 19 and 20, when Krager, the chief appraiser for Travis County, refused to reset values, all my commercial investment tax bills went down.
Okay.
And that was because homesteaded properties with homestead caps went up, even though they didn't change the role, the way that model and taxes went. So I'm really thinking homesteaded properties potentially in Travis County could pay less than they did last year. And I think that the burden on the commercial investment in raw land, it's going to go up, but I don't think it's going to go up as bad as we think it will. It's going up.
It's going up, and rents
it's going up,
which is another opportunity for agents. Is like, look, anything rented in the last, these leases are $3,000, $4,000, $5,000 a month sometimes, right?
Yep.
You know, get ahead of the curve, call the people that you lease places to and say, hey, rents are going to go up. Now's the time to buy.
Absolutely. Get that homestead cap to control those taxes.
Yeah.
Because if we truly had this thing settle where I think it's going to settle, we've never had our taxes go down as homesteaded owners.
Yeah.
And it would be crazy to see if it truly did at an escalating value. So I think we've got a twofold component play there that nobody really kind of wants to talk about at this moment, but
But do you think that the government will, I mean, that they legally cannot go more, or they're capped at what would you say, 3.5%?
Yeah. So City of Austin's legally bound by Texas state statute that they can't increase their budget more than 3.5% without a rollback tax vote.
Okay.
The last time we had a rollback tax vote was the light rail proposition. And that passed, with flying colors. But since that passed, the state in 2019 enacted a 3.5% budget cap compared to the 8% prior. So the city can't escalate the budget as fast as they have in years past.
Yeah.
So I think I really think we've got as homeowners that we mathematically have a great chance of paying less than we have in years past. Because if the tax rates drop more than 10%, which I think they will, and our values only went up 10%, we've won that bet and we're actually going to pay less than the year prior.
Wow.
So I until the mill rates are set in October, we don't know these things, but I really think there's some strong mechanical things. Now, investors, it doesn't apply to investors because guess what? They're going to get the full tax bill, whatever the numbers may be. And the renters are going to pay that. But it's going to be interesting for our homesteaded homeowners. I really think there's a strong chance that they actually pay less than they did the year prior. So yeah,
that's great.
It's an interesting thing that I kind of keep looking at going, I think we're going to win here. I personally added
drinks are on me if that happens. Okay.
Dude. Yeah. Drinks are on you if that happens. I really think for homesteaded ones, especially for long-term homeowners like me, you, that homestead cap's got a good chunk of cash built into it.
Yeah.
That's going to be great. But people who've in their first year of homesteading, they're not going to see those protections because they haven't set those budget caps.
So before we go, where do people find you? Is it still the Housing Report on
Housing Report on Facebook?
Yeah,
it's
a lot of great information. Guys, I encourage you to join our newsletter. Go to the link below in the description. It's RealtyHack.com, and there's a sign up for newsletter. We do not put out BS newsletters. It's all information. So Chris, thank you so much for
absolutely,
being
Ryan.
our guest.
Thank you for the time. I appreciate it.